More businesses than ever could potentially qualify for the research and development tax credit. However, many are left wondering, well, how does the R&D tax credit work? Unless you're some sort of expert CPA, then you probably have questions that need answers. So today, I'm going to explain to you exactly how the R&D, research and development tax credit works. So stick around, you're not going to want to miss this. I'm Rich Smith, and one of the money lessons you never learned in school is how tax credits work, especially when you own your own business. Now, the research and development tax credit has been around for a while, but it seems like so few people truly understand how it works, who qualifies, and how to get that money back in your pocket. So real quick, before I break it down for you, drop a like for this video. It helps spread the word to other business owners like yourself. Now, I've done videos on what the research and development tax credit is, but people might still be wondering, well, how does it all work though? For example, how would it apply to yourself? Well, simply put, this is a dollar for dollar tax credit that can be applied to your tax bill, both with the IRS and at almost all state levels, so long as you're designing, developing, improving your business. We're talking business products, business processes. Maybe you have some business software that you use and develop. So yeah, I don't want you to sit there and disqualify yourself thinking that you don't have scientists on staff, so this probably doesn't apply to you. That's an old way of thinking, so let's just put that aside. So who qualifies for this research and development tax credit? It is any businesses who have US-based employees, maybe US-based contractors, who have supplies that they spend money on, and then they are trying to develop something. They're trying to improve something. I'm gonna back away from like scientific words like experimentation. Just think of trial and error. If you, in your business at any time, have some sort of project that's going on, and you set a goal, and you're working towards it, and there's some uncertainty there, right? Maybe there's even some failure. So you iterate, you're like playing around in that proverbial sandbox, if you will, and then you test something out again. And you keep doing that, and you keep improving it, and then eventually you're happy with that. That project comes to an end, but then what do, right? You move on to the next project. Well, all the wages that you spend doing those projects, all of the contracted, independent contractors, contracted employees that you have, not W-2, but the people you spend money on for other, things and services, and then any of the supplies that you use. Those three items, the wages, the contractor expenses, and the supplies, can be used to calculate a tax credit for your business. Now, ballpark, what are we talking? Well, it's usually in that 10% range. You got to do the calculations, and you're going to need some help with that. Don't get me wrong. It's not a very easy tax code this government gives us here. But I just want to point out, no industry, no business is excluded from this. So yeah, some businesses, some industries might seem like no-brainers. They should definitely take advantage of it. And then other ones, they probably just have to think about it a little strategically, maybe kind of answer a couple of questionnaire style questions, and then if indeed they qualify, well, then that's money in the bank. So let's just talk activities. We're not going to talk any specific businesses, just going to talk about the types of activities that usually fall underneath this purview, this umbrella of the research and development tax credit. Let's just talk about products. If you're developing products, if you're improving products, these could be like tangible things, but honestly, it could also include intangible things. And again, I don't want to lose anybody. What is like an intangible product? It just means it's something that you make that isn't physical. You can't actually touch it. But think of all the businesses that exist online and produce products that you don't physically touch, therefore they would be considered intangible. Up next would simply just be processes. Think of your business and its workflow. I love looking at those business workflows, like where the customer is, how it goes here, where it goes, and then, when it finally ends. If you have one of those maps, one of those journeys of a customer, and you know that you're developing some sort of technical process, some sort of workflow for a manufacturing process, how you do things, developing those processes indeed counts. And then one of the last activities I'll throw your way, I'm just going to kind of mush these three together, would be techniques, inventions, and of course software. Those are such broad terms. We're talking techniques, inventions, software. If you have a new and improved, innovative way of doing something, using something in your business, then those types of activities you can take a look at and see if they qualify. Now, moving on, this next part, this next phrase, if you Google it, if you ask your accountant or CPA about it, it's going to be where you're going to lose some people simply because it is written by the IRS. So it's my job to break it down for you, and this is known as the Research and Development, the R&D 4-part test. You see, the IRS says, listen, if you want a business expense to actually count towards this R&D tax credit, then we just have to answer 4 questions to pass this 4-part test, and then that expense could qualify. The first one is the expense leading towards some sort of improvement or some sort of creation of a product, of a software, of a process, like I mentioned before? Of course, you're going to be able to answer yes for the item at least that you're thinking of, because that's what brought you to this video, and you know that your improvements, your experimentation, your innovations are indeed leading towards something in your business. Question number 2 is going to be, is it technical in nature? You see, everything comes down to the idea that research and development is based somewhat in the hard sciences. Think about all the sciences that you learned in school, the ones where you would have some sort of research lab component, when you had to do little experiments, tracking data, trial and error, finding out what works and what doesn't, is technical in nature. That's based on science. So if you do that in your business, then you're probably going to be able to answer yes to that second question. The third one's really cool in my opinion, because it asks you, was there some uncertainty in the development or in the improvement of whatever you are developing, whatever you are researching? And of course, there is some uncertainty when you are trying something new for the first time, when you are trying to improve stuff. For example, if you are simply following a recipe, step 1, step 2, step 3, then there's really not going to be any uncertainty there. But if you are out there innovating, you're adding a little bit of this, a dash of that, excuse the baker analogies, well, then you know that you're not exactly sure how it's going to end up. You could have an idea and then you test it out, and if you don't like it, you go back to the drawing board and then you try it again. And question number 4 of that 4-part IRS test is, was there some sort of trial and error process? It kind of goes back to question 3 with the uncertainty, but did you actually trial and error in the development of this product because there was indeed uncertainty? It's kind of like if you answer yes to 3 and you're going through the development process, then you're going to be able to, of course, answer yes for 4. All right, big picture key takeaways. This type of video is not easily digestible. We're talking about taxes. We're talking about research. We're talking about development. This applies at the federal level, the state level, and across any and all US-based businesses who can potentially apply. So again, I'm going to leave a link down below in the description if you want to learn more. I've partnered with multiple companies to try to help you get this information. I have found that many of them work very well with your own accountant, with your own accounting team, with your payroll team. They make it easy to get the answers to that 4-part test. and then implement that tax credit. I think I mentioned it before, they can go back retroactively and collect it for a few years if you haven't gotten it in the past. And you can even carry the credit forward. Yes, this also applies to startup businesses. If you just got going in the past 3 to 5 years, you should look into this too. And if you have any questions, leave me a comment down below. There's not a ton of information out there on the internet about this. So maybe we can all help each other learn, again, down below in the comments. Don't forget to check out my website. It is full of other business articles, podcasts, information about things you may or may not already know about. And if you're new to the channel, don't forget to hit subscribe and ring that notification bell. All right, as always, I'm Rich, and until next time.